Welcome to the Deployed Podcast, where strategy, ideas, and capital come to life.
Hey, everyone. Thanks again for checking in and joining me on another episode of Deployed. I'm super excited for this episode. But before we get into that, for those of you who don't know me, my name is Michael Kearse. I'm a real estate investor and fund operator. Over the last several years, I've worked closely with self-directed IRA investors, custodians to help retirement capital get deployed into alternative assets, particularly real estate-backed lending in ways that prioritize compliance, clarity, and long-term outcomes. On Deployed, my goal is simple, all right? It's to educate investors on how self-directed IRAs actually work, highlight best practices, and bring visibility to the custodians and professionals who make the ecosystem function. All right. Today, I'm joined by a special guest, Reneika Lightbourne. She's with Advanta IRA, which is one of the custodians helping investors navigate self-directed IRAs from education to administration, ensuring transactions are handled properly. How you doing today?
I'm doing fantastic. How about you?
I'm always good. Thanks so much for joining me. You are like the big guns. Like me booking you is like a highlight for us. So we're super excited. Reneika, can you give us a quick overview of your background and what led you into the self-directed IRA space?
Yeah, absolutely. Well, first, I want to say thank you for just allowing me to come in now. Let's share with your audience on your platform. A little just, history about me. I've been with Advanta as an employee for about 7 years, but I'm also an Advanta IRA client as well prior to joining staff.
Drinking
So
your own
I've
Kool-Aid.
sat where your clients are sitting in terms of personally using IRA funds to invest in alternatives. I just, love the opportunity to advocate both personally and professionally to get more people to utilize this unique strategy to build wealth.
That's awesome. What surprised you most about it when you first entered the industry?
It was like a light bulb moment in terms of the opportunities. Again, not many people knowing that they have the option to diversify outside of the traditional stocks and bonds. So for me, it was a light bulb moment. Like, okay, I can do this, I can do that. Okay, just
Right.
making sure it's structured correctly. Outside of that, like it's a blank canvas. So if you're creative or you have an interest in something, you have the option to possibly do it within the IRA.
What role does Advanta IRA play in the self-directed IRA ecosystem?
Great question. So Advanta, we're one of the nation's leading self-directed IRA custodian, meaning we don't give our clients any advice in terms of tax, legal, or investment. But if you want to use retirement dollars to make sure that, you diversify, we make sure you do it correctly per the IRS rules. You have a lot of flexibility in terms of self-directing, but there are some things you have to be mindful of. So we do all of the record keeping, all of the IRS reporting. If you have a client to say, hey, I want to buy 123 Main Street, we help you do that correctly. Dot the I's, cross the T's.
So
Yeah.
from your perspective, what do most investors misunderstand about what custodians actually do?
But there's a couple things in terms of misunderstanding. I wouldn't say unaware. Clients don't know that, first of all, they have the option to invest in alternative assets. Again, they're just accustomed to buying stocks and bonds, perfectly fine. A lot of clients are unaware of the actual rules. The IRS do have rules that you have to be mindful of in terms of making sure it's for investment purposes. You're not self-dealing. So we're here to kind of help you navigate those rules and be mindful. You don't have to be the expert in self-direction. One of the beauties with Advanta in terms of how we differentiate from other custodians is, you have an assigned person. So again, when you're ready to buy that real estate or do that private lending deal, we make sure you structure it correctly. So
Yeah.
just being mindful of what the rules are and then just having the wherewithal to know that, hey, I can actually do this.
Yeah. I think it's interesting that you mentioned that sometimes it's more of they don't know some of the advantages that they have, right? Which is interesting. Is there anything that you would wish or hope that they would understand or know before someone opened up a self-directed IRA, whether or not they did that with Advanta? Is there kind of anything
I would
that
say
comes to
just more
mind?
so educating, like getting familiar with, this is an opportunity or this is a tool that you should have in your toolbox. So education definitely is something we strongly advocate. You've been on our platform a couple times. So just educating yourself, knowing exactly this is an option for you, but then exactly what is it that you want to invest in? I know your clients are real estate investors, but that can be pretty broad. Are you looking to do a fix and flip? Are you looking to do a rental property, whether it's long-term or short-term? Are you looking to private lend? So there's so many different things that you can do. Just getting familiar with, hey, this is something that I want to incorporate into my investment strategy or wealth building strategy. And then, of course, what I tell clients is you're always in control, meaning nothing happens until you say it does. So, you can do your due diligence. Strongly encourage, reach out to us, go to our website, go to our YouTube channel. It's a great wealth of knowledge and resource out there for you. So just kind of educating yourself first. And then, of course, once you're ready to uh, take action, we'll be there with you to kind of guide you through that process.
Love it. I love it. I love it. At a high level, what assets can be held in a self-directed IRA?
Oh my gosh, it's near limitless. So, like, if you were to go to the IRS website, the only three things they'll say you can't invest in is life insurance, collectibles being antique art, wine, stamps, anything of that nature, S corps, but that's more so applicable to S corps. But outside of that, you get to be creative as you want to. So again, if you're a real estate investor, or you're interested in real estate, you can invest in real estate, whether that's private lending or that's investing in a syndication deal like an apartment complex, or it's doing, a short-term rental or fix and flip or commercial. Or if you wanted to invest in oil and gas, or you wanted to invest in a private company, precious metals, it's universal in terms of what's on the table.
I love it. I love it. I love it. Are there any common mistakes that you see people make when they self-direct retirement funds?
Yeah, the most common mistakes is, unfortunately, again, there are rules, prohibited transactions, self-dealings. When the IRA makes an investment, it has to be for investment purposes. Yes, you own your retirement account, absolutely. You're in control, absolutely. But you have to make sure that you're doing what's in the best interest of the retirement account. It's for later. It's not for today. It's, the IRS is saying, hey, this is when you retire. You can certainly benefit from it then. But if your IRA buys a rental property, you can't be living in that property, or you can't, have your lineal ascendants or descendants live in that property. Or if you wanted to lend money to an investor, absolutely you can, but you can't lend it to your spouse or any lineal ascendants or descendants. So just be mindful of the rules and no self-dealing. A lot of times I get these questions from real estate professionals. Let's just say someone's an agent, and if their IRA is involved in a deal and they're the agent, they can't pay themselves a commission. If it's their client, then yeah, they can typically go through and get a commission, but just making sure it has to be for investment purposes. There's some rules to be mindful of.
Got it. Got it. And I loved how you use the exact terms. Um, would you say self-dealing, or was that the
Yeah,
term? Like,
self-dealing. A lot of times the terms are used interchangeably, but just simplifying, like the analogy I usually give clients is, hey, if the light says red, you stop. If it says green, you go. You can drive from East Coast to West Coast. You can take as many different roads as you want to get there, but there's some driving rules you have to adhere to. And that's the same thing with self-direction. You have a lot of flexibility, a lot of different things that you can do, but there are some things to be mindful of. And again, you don't have to be the expert on it. You have an assigned person at Advanta. You have us as the expert to where, hey, Reneika, I want to do, this is what I'm thinking. We can help you think through or structure out the deal to make sure it's compliant per the IRS rules.
are there uh, are there any types of situations that investors usually run into compliance issues without realizing it, or is it pretty straightforward?
For the most part, most investors are usually passive investors, meaning they're lending money to someone like yourself to participate in a deal, or they're lending to, in a syndication to buy an apartment complex. So most passive investors, they really don't run into that. It's if you're wheeling and dealing and you're active, meaning you're doing fix and flip, and hey, you can be the one that's painting, painting the wall, or, swinging the hammer or mowing the lawn. So just making sure that if you do need to do a flip, yes, you can do a fix and flip in your retirement account, but you can be the one that's doing it in the sweat equity. So just making sure that, another thing too, clients might know, and whether they do this intentionally or unintentionally, like let's just say, hey, your cousin or your friend is not a prohibited person or a disqualified person, my apologies. You can't have your IRA lend them X amount of dollars and then they turn around and lend you the same amount of money, because now the IRS is going to look at, well, what's your intent? Was your intent always to get X amount of dollars? So you want to make sure, again, when you do a deal, you're doing it in the best interest of the IRA. You're not washing, meaning, hey, I lend my buddy 100,000 and his IRA lend me 100,000. No, you don't want to do that.
Yeah, yeah, makes sense. Makes sense. How should investors think about choosing the custodian? Like, what actually matters beyond like fees?
And so for us at Advanta, we take great pride in providing our clients that concierge style service. I would definitely encourage you. Yeah, you want to, do your due diligence, see other custodians out there. You want to look to see clients' reviews, or you want to talk about how long they've been in business. For us, we've been in business for 23 plus years. We have about $4 billion under administration. But the great thing is that we pride ourselves on providing that concierge style service, where it's not a call center when our clients call in. They have a direct point of contact, or even if one of our colleague is out, there's somebody to fill in or assist that client in their absence. So just making sure, regardless of how much money you have in your account, whether it's $1 or $1 million, every client is important to us. So just making sure that you know that you're valued. But yeah, you want to definitely kind of ask around and see what the other custodians are doing. Also, to our educational platform is second to none. We have a lot of great practitioners and experts that come on our platform to knowledge share. Clients still have to do their due diligence, but we take great pride in educating the general public. So you want to see who's actually doing what they say they do, and that's
Yeah.
by far Advanta. Again, yes, I'm an employee, but I'm also a client. And before I joined Advance, I did my due diligence. I looked underneath the hood and then ultimately decided to open up my account.
Yeah, I think that speaks volumes when someone drinks their own Kool-Aid, so to speak. Yeah, so I
Yeah,
like that.
it's tell clients it's one of the best tools. Again, it's not end all be all, but it's one of the best tools that most investors should have in their toolbox.
Absolutely, absolutely. I like how you framed that. Why do you think the self-directed IRA tends to align well with like passive investments, like private lending?
Private lending, it's one of the preferred with real estate investing. It's one of the preferred options for clients, meaning, hey, they don't have to be the expert in, fixing and flipping, or they don't have to be the expert in note investing. But if they have money sitting in an old 401k, they're working a 9 to 5, they have an interest in real estate, but again, they're not the expert in that. They know, like, and trust, someone like yourself. Like, you know what, I want to put a couple dollars with Michael to go out and grow it from X amount to whatever their return is it's going to be with you. So just, having the ability to diversify outside of stocks and bonds. Yes, I tell public markets give you the option for participation, but the private markets also give you the opportunity for ownership. So if they can say, hey, you know what? I'm investing in a real estate deal that my IRA actually owns, 123 Main Street, then whether that's through private lending or through JV, private JV opportunities, and they have the ability to do that.
I love how you are giving me some golden nuggets when I continue to educate. It's great to participate in public opportunities, but the private opportunities give you opportunity for home ownership. I love that. I'm stealing that. So thank you so much for giving me
Uh-huh.
that. From a custodian's perspective, what characteristics make a lending deal easier to administer?
So Advance, again, we don't police in terms of the actual
Okay.
agreement between the borrower and the lender, meaning we don't draft the paperwork, but within that note agreement, you want to outline exactly, like, hey, essentially the IRA is being the bank. You get to say exactly, how much you're willing to lend, the expected return, and that's negotiated between the borrower and the lender. But if it's secured, and obviously, yes, that asset, having that note agreement secured by an asset, meaning if somebody was to default, the IRA can take possession and make itself hold, but just outlining the terms of the agreement. When you go to a bank, the bank is going to tell you how much they're willing to lend you. They're going to tell you, terms of when making payments. And of course, so it's the same thing, your IRA outlining the terms, whether you have your attorney draft up the paperwork, or again, if you're part of a real estate investment group, kind of look at their standard paperwork that you can kind of modify to fit, like, hey, my IRA is going to lend, Jane Doe X amount of dollars, and I expect to get X amount back in return. Like, hey, I'm going to lend 25,000. I expect to get 10% return, whether that's, quarterly, annually, or at the end of whatever that investment term is. So it's just more so the borrower and the lender deciding the terms of the agreement.
Absolutely, absolutely. And what documentation or structure do you typically like to see when a self-directed IRA investor is lending into like a real estate deal? Is there
It's
particular
just
document?
usually a note. So depending on the deal, if it's just like a private lending, it's usually a note. It doesn't have to be extensive in terms of, a couple pages, but a one page, you're outlining the note. Obviously, when you do unsecured notes, that's a lot more risque. So you want to be mindful of the risk that comes with that. And that's why it's important for investors to do their due diligence, meaning know, like, and trust who you're investing with. If it's a syndication deal, let's just say the syndicator is raising capital to buy an apartment complex in Texas, then there's a different type of paperwork, whether it's a subscription agreement or a private placement. So it just really depends. But when it comes to private lending, it's just a simple note. It can be 1 page, 2 pages, 3 pages outlining, my IRA is lending X amount of dollars, to your company or on this particular property. And here are the terms. And here's, you want to outline too exactly what are the repercussions, meaning if there's going to be late payment, or if you have to foreclose or take possession of, what's the collateral that's securing this asset or this investment.
Yeah, thanks for sharing that. Thanks for sharing that. What I've commonly used is a balloon promissory note because the way that I borrow, I'm usually paying them that balloon payment on the end. And for those of you who may not understand, a balloon payment is if they lend me 50,000, I'm going to give them one payment back of 50,000, regardless of the return that I'm giving them for that time period. And then a mortgage security agreement are the two documents that I normally use. Sometimes one custodian may have me notarize both documents. Sometimes a custodian will be okay with the way that I usually do it, where I only notarize the security agreement. And if I'm doing a deal, sometimes people want a personal guarantee. But to your point, documentation is always usually straightforward. So thanks for clarifying that. And then how do custodians typically work with operators or sponsors in this space? What's that like?
So, part of my role is cultivating relationships with operators and sponsors. Obviously, once they have we have mutual clients. The account manager will be a point of contact to kind of help, complete that investment transaction. But we don't endorse any particular product or investment provider, but just more so building that relationship to building that where, hey, we do have mutual clients. Let's see how we can make it as easy and streamlined as possible for our clients. So that establishing that relationship, cultivating that relationship, and then of course doing what's in the best interest of the client. In terms of investment documents, again, one of the things that we pride ourselves on is that concierge self-service, and our client manager is a great part. They're fabric to that in terms of on the back end, completing the investment documents, making sure everything's properly title invested, having those continual ongoing conversations once a client's onboarded.
Yeah. Yeah. Awesome. Awesome. And then is there anything that separates one operator from another as far as like, oh, that operator is so much easier to work with versus, I got to work with this sponsor?
Well, I mean, it's like, different personality traits. Everybody has their strengths and weaknesses. Obviously, we encourage or we like, people who have their ducks in a row in terms of paperwork, efficiency, professionalism, having that sense of decorum. And also too, making sure that they deliver on what they promise to their investors, because oftentimes or a lot of times if the investment provider doesn't, send the money back when it's supposed to, even if it's a balloon payment, yes, perfectly fine. You can structure it that way as long as the client is in agreement with that. But if let's just say an investment provider doesn't deliver and say, hey, I'm going to send your money back at the end of the month or the quarter or at the end of the investment, then the clients reach out to Advanta when we have no control in terms of when the investment provider is going to send the money back. So obviously, someone doing what they're supposed to do is most advantageous for both parties or all parties.
Yeah, absolutely. Absolutely. Where can people learn more about Advanta IRA or the educational resources that you provide?
Yeah, I would say go to our website, advantaira.com. It's a great resource. Anything and everything related to self-directed IRAs. Again, this is our area of expertise. But also, too, we're on every social platform. So whether that's going to YouTube, we do a lot of weekly webinars. So you're always welcome to go to our YouTube channel. You can go to our LinkedIn, Facebook, all of the social media platform. But I would definitely say go to our website, Advanta IRA, and you
Perfect.
can book a
Perfect.
call in there with me as well, or one of my teammates or colleagues.
Awesome, awesome, awesome. And then for someone sitting on retirement capital who wants like more control, but also wants to stay compliant, what advice would you like? Yeah.
I would definitely encourage them to do, even if it's a quick consultation call, like, hey, just so we can kind of talk through their exact scenario. They want to be introduced to the concept first and foremost. So doing some initial education and then reaching out to someone like myself at Advanta IRA to say, hey, Reneika, brand new to this strategy, but I'm just doing my due diligence and I can kind of walk them through. So just kind of laying out like, hey, this is what's on the table for you, meaning this is self-direction, this is how it works. Usually most investors have something in mind in terms of what they want to invest in. So whether that's private lending or some other type of real estate structure. And then I can say, hey, well, these are the IRS rules and this is how you can potentially structure that. And then of course they take their time, or depending on their personality, they want to move right away, or maybe they have a deal that they have in the back of the mind that they want to prep for. Or like, you know what, I want to get this set up because I know in the next 6 months or 8 months or however long, they'll kind of have an opportunity that they want to participate in. So I would say having them reach out to us, reading, going to our website, downloading one of our ebooks, a self-directed IRA ebook. It's pretty straightforward. And if they have additional questions or need clarity on like, hey, if I move money from my IRA, is this a tax liability? No, it's not. It's just moving from one retirement account to the next. So just kind of helping them like pacify those fears of, oh, this is going to be a tax burden. No, it's not. If it's an old employer plan, the process of moving funds over from without causing any tax implications.
Yes, thank you so much. Yeah, I had one of my lenders um, had that same big fear. I was like, no, you can move it over. There's no issue. I can help you. And I actually referred it to you guys.
Yeah.
Hopefully we can get her to have some confidence. Well,
There,
Reneika, thank you so much. This was amazing. I know you're super, super busy. So the fact that you took time is really a gift. I truly, truly appreciate it. Thank you so much.
I
Uh,
appreciate you as well.
yeah, yeah, absolutely. For those of you who are watching live or for those of you who are watching the replay, if this episode was helpful, please, please, please share it with someone who has retirement capital, wants to understand their options beyond the stock market. Okay. And if you want to learn more about the self-directed IRA and how it can be used for passive real estate backed lending, check out the resources in the descriptions. Thanks for listening to Deployed, and we'll see you on the next episode.
Thank you, Michael.
You've been watching the Deployed podcast, where we deploy insight, capital, and growth.